Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So, first off, I want to say thank you to those of you that stuck around. We had our option session last night. Went over kind of like a year-end review, just some of like the big topics we've covered this past year. It's been a packed year, kind of a crazy year. I mean, I guess every year is kind of a crazy year, but that's what makes trading so enjoyable, right? Is that constantly changing. So went over some of the highlights of what we talked about, and I always really like value the time we get every other week. And so just want to say thanks to you guys that stuck around. If you weren't able to make it, that should be up on the website soon. So definitely check that out. And we didn't go over this like per se necessarily. We talked about a lot of things, and we talked about how we're kind of entering like a seasonally strong period for the market, right? That Santa Claus rally, the stretch between right after Christmas Day through New Year's Day, right? That's a seasonally strong stretch. But one other thing to also really kind of talk about is that it's a seasonally quiet stretch, right? Uh, right now, we have some big names reporting this week. So FedEx is tonight after the close. Nike later in the week. Micron tomorrow. So we have some bigger names reporting this week. But actually, next week, there's not a single company scheduled. Not one. And the following week, the last two sessions of December, there's not a single company scheduled either. So as of right now, earnings for 2009 officially end this week. So there's no scheduled news on the calendar through the remainder of December. All right. That doesn't mean we can't get unscheduled news because there's maybe still some bio news expected. But for right now, just looking ahead on the calendar, the news flow, the expected news flow is really going to dry up, right? And that doesn't mean stocks can't move. I mean, we get headlines all the time and we get tweets all the time. And there definitely could be volatility. And actually, last year, like the 2 weeks right around Christmas and Hanukkah were absolutely crazy because of the overall market volatility. This year, a little bit different story. And because of that, right? I mean, last year there's some really, really massive ranges, massive volume, huge daily swings, right? Back down here. Different story this year, and actually, like the volatility, the VIX, right? VIX, VIX got like a 12 handle, so very, very, very low. And you really need to like take this into account with your options trading, okay? Because in a kind of like a lower volatility environment, like lower participation, lower volume, that really kind of lends itself to just theta burn, right? I mean, you're sitting in a stock, doesn't have any news, isn't moving. Those contracts are just losing value, right? Implied volatility crunch, theta's burning away, and it's like a bad recipe. So at this time of year, right? As we kind of get into the holidays, I mean, some people will size down and maybe like close out some things, kind of really like trim their portfolio so they can spend time with family, friends, travel, do whatever, and that's a great idea. But what also, if you're going to be at your desk and you want to be trading, you want to be active, what I like to do and the way I approach this is I focus kind of on like two different things. So day trades, okay, because like that in and of itself kind of helps prevent some of like that overnight like theta burn, like some of like that like that option churn when the stock is just like flatlines for 2 or 3 days. So day trading where it's like in after the open and out before the close, right? Your holding period's very, very short. So like that'll be one way to kind of like prevent like the stock from just kind of like sitting sideways like for multiple days, multiple weeks, and like you're seeing like those options eat away, right? So like those are shorter term contracts, very, very short term trading window, right? The other thing to do is tailor your contracts or tailor your trade ideas, your strategies through upcoming catalysts. All right. So with us towards the end of December here, the two big things on the radar coming up right at the beginning of January are going to be the holiday sales for the retailers. Okay. Usually, like the first 2 weeks of January, you get the big brick and mortar names come out, give holiday sales numbers, right? So that's why Target we're looking at, Macy's, Kohl's, Nordstrom, Walmart. Typically, these names will give holiday sales like right after the calendar flips over, and that's usually a pretty big catalyst for these retailers right at the beginning of January. So if you're looking at like trades, you probably want to push your expiration out through like the middle of January, just because like those contracts should have like that catalyst premium, and they should hold on to their value a little bit better. All right. Um, the second biggest thing in January is the Jpmorgan Healthcare Conference. So the healthcare stocks have been cooking, bios have been just running so sharply, and this is usually a pretty great trading, or creates a lot of great trading opportunities right at the beginning of January too. Whether it's managed care names, pharma, med tech, bios, all sorts of different things. They'll either have like data or give guidance, or I mean, there's usually some M&A. So a lot's going on. So if you're focusing on like two areas, I'd say retail and healthcare. Those two areas through January have some upcoming catalysts. Those options probably should have a little bit more participation, a little bit more demand, should hold on to their value a little bit better. The other thing you can do is a little bit longer term strategies. Okay, so like February, March, because those just by like their very nature kind of like aren't a focus on like the near term. So like the implied volatility risk won't be as high on like those longer term contracts because the implied volatility is lower, right? More time value. So lower implied volatility, lower theta also. So if you're looking at like ways to trade to still be active, but maybe like kind of like lessen that risk of kind of stock sitting sideways, no news, like less volatile environment. Those would be like my ideas. Like that's how I would approach it. It would be either focus on strategies through the beginning of January, like retail, healthcare names, or if you're looking at other names, it's probably through February or March, a little bit longer dated because those will have lower theta, lower implied volatility, and should hold on to their value a little bit better than like anything short term. All right. So, questions or comments, you guys know I love to hear from you, so please don't hesitate to reach out. If you like these videos and you're looking for more information on options education or more option trade ideas, please follow up with the link in the description for more information on options to play. All right? So I hope you have a wonderful night, and I will talk to you all tomorrow.